eviscerating the power of AMC's Class A stockholders in order to force through approval of a proposed dilutive share count increase that the stockholders repeatedly had rebuffed and were not willing to support at the corporate ballot box. Now, I know all of you already have heard of the lawsuit against AMC and the board of directors. The lawsuit is from a retirement fund, and they're basically saying Adam Aron issued APE even though shareholders continuously said no to dilution. Therefore, he eviscerated the power of AMC's Class A stockholders. Now, what's funny about this is this fund owns 0.01% of AMC as a company in general and calls themselves a shareholder. Not only that, they have a very horrible track record, especially for the one-year return. And the question here is, does this lawsuit have merit? What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. If you're new, we have a lot of stuff to go over, and this is going to be a good video. All I ask you guys to do is hit the like button, hit the subscribe button. Let's get into the rest of this document and the DD that we have to follow. This tweet goes, how can you prove in a court of law that shareholders had repeatedly rebuffed dilution or reverse split? And two, we didn't support it at the ballot box because it never went to a fucking vote. Basically, do you guys remember when Adam Aron said, oh, we had shareholders voting on dilution, but, you know, I pulled the vote? This might be the only sprinkle that this fund has in this lawsuit that may stick. In my opinion, I don't think anything else in the lawsuit actually has merit to it. I think they may say, you know, Adam Aron pulled the vote. This is our proof that he eviscerated the voting power of shareholders because he pulled the most recent vote and then issued APE. But it's all about the timing, right? The threshold list, the reverse split, the conversion, and now the lawsuit comes out. This retirement fund is asking Delaware Chancery Court to pause the APE conversion. Delaware Chancery Court moves fast. This is not going to be a 3 to 5 year thing. Basically, they strictly went to this court because they move fast and because they want the APE conversion to be paused. Shareholders now are even going as far as contacting the company suing AMC, telling them they are going to sue them if the lawsuit causes any damage to their investment or if they don't correct the things that they mentioned in the lawsuit. So basically, a breakdown is that a retirement system filed a lawsuit against AMC claiming that the company and several of its directors violated state law to eviscerate the voting power of common stockholders who had not supported issuing new shares. You guys let me know in the comments down below if you think this sticks and if you think the lawsuit came at a weird time and if it's fishy, because they barely own AMC, except they are calling themselves a stockholder and saying they lost money, which they could not have lost money with that position in AMC, especially their track record of losing money. It's horrible. And finally, them wanting to pause the conversion and the timing of this coming up makes me extremely lean towards voting yes, even though all of the things that we've brought up in the Walk and Talk Live and other videos were leaning towards voting no. This really pressed the button for me. Real quick on AMC's chart, we're up 10% on the day, sitting at $6.72. And I want you guys to take a look at the white boxes that I have drawn out. These are the cycles that line up perfectly every single time. I don't want to spend too long on the chart, but take a look at the pattern that's playing out. Exactly what we talked about yesterday. The U that comes into the cycle period. You saw it back here, back here, back here, every time we enter this box. And I think personally AMC has a lot more room to run, whether we rip now or later, and I'm still holding my calls for that reason. Take a look at every single time this U pattern forms out. We need to break the most recent peak, and we did not break that yet. That most recent peak is at $7. You can see it breaks the peak every single cycle that we play out on AMC. So I think AMC is at minimum this week breaking $7. If not today, if not tonight in after hours, if not pre-market tomorrow morning, it's going to happen tomorrow or the next day, in my opinion. Not financial advice. I am not a financial advisor. Touching on some numbers real quick, 23.17% short interest and utilization is still maxed out on AMC. The cost to borrow sitting up about 700%. It's sitting at 683 for an average. So the average short seller is absolutely getting hammered right now, especially being on the threshold securities list as well. The max sitting at 905%, while the minimum is only at 1%. So one short seller out there is paying this very small fee, probably trying to scare retail. However, you want to pay attention to the average at 683. Now, AMC has been on the threshold securities list for 13 consecutive days, the day that we've been waiting, the day that I have never seen it on since the entire few years that I've been holding this stock and keeping up with the community and all the DD. I've never seen this happen before with AMC. And you know, after 13 days, fail to delivers are supposed to be forcefully covered on an open market. Whether that's happening now or not, AMC is up 10% and probably up a little bit around 30% over the past few days. But I want you to read this. In practice, this has not worked out so well. Many companies remain on the threshold list for months at a time. This can be explained by a practice in which fails to deliver are rolled over from one brokerage to another. After 13 days, a market maker that naked shorted the shares is required by Reg SHO to buy shares in an open market and deliver them, which is exactly what we just talked about. However, before the closeout requirements are triggered on day 13, the market maker can transfer the position to another willing market maker or broker, and the 13-day countdown to a mandatory buy-in starts all over. This frequently used Wall Street trading technique allows fails to deliver to remain for months or years. Now, this is scary to say the least. They're basically saying they're going to pop fails to deliver from one broker to another broker to another broker to another broker. And the reason I don't think this is actually going to happen, for one, is because why would they let it get to day 13? And for two, take a look at what Peter Hahn says. Major question: if all the brokers have fails to delivers maturing at the same time as the number of FTD grows, the ability of a fresh broker with no FTDs already diminishes. But the guy thinks that the way he's reading it, the snippet, I don't see that a market maker or broker with fails to deliver has to transfer to someone without FTDs. I'm reading it as if this market maker or broker held these fails to deliver for 13 days, and then this market maker must deliver, but hand them over to a different market maker and reset. Peter Hahn goes, yeah, I'm saying that if you are already holding 10 million FTDs, do you really want to take on another 20 million of Doug Sifu's problem? What do you guys think down below? Whether this tactic is happening or not? One, why did they let it to get day 13? Two, the cost of borrow is extremely high. And three, if it was working enough, why are we up 10% on the day? Moving on, AMC GME shorts took it up the ass in January with a loss of 81 billion. Thomas Petrified of IBKR Interactive Brokers made a bold-faced lie on CNBC as Credit Suisse was investigated for false statements when investigated by international brokers. Speaking of that, rating agencies are pausing downgrades on Credit Suisse. Junk status would cause a bank run. Institutional clients like pension funds and foundations would be forced by investment regulators to leave the bank, Credit Suisse. And the winner of the day for the highest rate for their credit default swaps is, you guessed it, Credit Suisse. Winner for 289 days in a row. A guess could be much longer than that. All-time highs, way to go, credit shit. Finally, let's roll that clip of the IBKR CEO Thomas Petrified saying there's no magic here. If a company does not make money, it's stuck. Keep in mind, he did slip in one thing, that there's more longs than shorts. However, he is not looking too solid. A lot of people are on Twitter saying he won't make eye contact. He's talking very without confidence per se. And ultimately, he just looks afraid.
Meme stock trading back?
This is a terrible situation. I mean, I feel so sorry for these people who are going to lose all their money. But of course, I've been saying that for some time, and I've been wrong. But look, eventually there is no magic here. If a company doesn't make money, its stock cannot float high forever, right?
I'm just curious what you're seeing, though, in terms of just if you could give us some color into engagement among retail investors this year versus last year.
So as you know, many of our investors are more professional investors, and on these stocks, you know, we have just as many people on the long side as on the short side. So you know, this is a actively trading market, and that is extremely good for our business. And as I say, many customers are not long these stocks, but rather on the opposite side. And
I was going to say,
yes,
Tomas, we normally like to ask you about short positioning. How would you characterize your clientele's short thesis right now? Are they all in on the short side?
Not all, but you're right. I mean, we have plenty on the short side, and you know, we're almost, it's still, on the long side is still a little more than the short side, but not much. So it's pretty balanced.
Closing out the video, more layoffs are coming as Facebook is planning to fire thousands of more employees, and Coinbase is reporting a net loss of $2.62 billion in the year 2022. Make sure to join us over here on the platform Moomoo. It's a commission-free trading platform that is going to allow you up to 17 free stocks for just signing up and making a deposit. Once you open an account using my link in the comments or the description, guys, download Moomoo on your phone or computer. It takes 2 minutes to do so. Open an account and make a deposit of at least $1. You are going to start earning free stocks from there. Plus, on top of that, even if you didn't want the free stocks, you're getting free level 2 order book data, access to trading options, a customizable earnings calendar, and more. So make sure to use my link in the description down below. Also, shout out to the people killing it, absolutely killing it in Discord. Make sure to join the Discord, guys. If you've been sleeping on that, thinking about it for quite a while, make sure to not waste time and just get in there. Seriously, guys, no point to wait on joining the Discord. Overall, that is what I got for you for today's video. You let me know what you think in the comments down below. I love you all. Lottery Stocks out.